The Dow fell more than 800 points today. Analysts say investors are worried about rising interest rates. Now, this is the first time the Dow has dipped below 26,000 in a month and the lowest it's been since April. For more, TheStreet TV correspondent Scott Gamm joins me now on the phone. Scott, thanks so much for being with us. What exactly is driving this sell-off? Do China tariffs have something to do with it?
No, I would say the interest rate worries you mentioned are the main culprit. You know, interest rates have been a fear for most of the year. Investors have been expecting yields in the 10-year Treasury to rise, just as the Federal Reserve hikes interest rates. They've, hiked rates 3 times this year. They're gearing up for a 4th one in December, although with the market volatility that we're seeing right now, you're going to have investors start to wonder if Fed Chairman Jerome Powell will go ahead with that December hike. Obviously, time will tell. We have a couple months until that point.
And Scott, you follow the markets. This is what you do. How much did this sell-off surprise you? It was interesting to me because usually when you see a sell-off like this, there tends to be a little bit of a bounce at the end of the day, some buyers coming in for the deals. We didn't see that today.
Yeah, well, here at Yahoo Finance, we've been covering the market sell-off all day, and that is a very important point. We did not see any buyers sort of come in at the end of the day. It was sort of this panic selling, so to speak. The Dow was down 500 points in the early afternoon, and as that, 3:30 level approached, 3:30 p.m. into the 4 p.m. close, that's when you saw some of the biggest declines in the Dow today, of course, leading to 831-point decline. What is interesting, though, is yields on the 10-year Treasury yield. We mentioned earlier how they've been rising. They actually fell at the very end of the session, meaning that investors took money out of stocks, as we know, but actually put them into bonds as a safe haven play. So anytime we see Treasury yields fall, it means investors have been buying bonds, prices and yields move in opposite directions.
So nobody's just sitting on their cash or putting it into gold just yet.
Yeah, I think you have plenty of investors kind of sitting on their hands going into cash. But, look, it's important to point out that the S&P 500 is still up 4% for the year. And we could very well end up well beyond that level towards the end of the year. A lot of strategists still have a 3,000 target on the S&P 500. We're now at 2785. And the other thing to remember is October is typically a volatile month for the market. So you go back historically, we've had many corrections throughout the years during the month of October.
So, Scott, how concerned do you think investors should be, or should they wake up tomorrow morning and start buying up the deals?
Well, I think it's important to look at how some of the international markets perform overnight, and we'll kind of reassess in the morning, see where futures are, see where Europe is, see where Asia is. But I would expect some additional volatility into tomorrow, just given how we didn't see any buyers come in at the end of the trading session today. The other thing to point out is that investors are constantly trying to remain diversified. So you look at what's going on with interest rates, and you have to wonder, okay, well, what do interest rates have to do with the price-to-earnings multiple of, say, Pfizer or, Procter & Gamble, or stocks that, companies that will do well regardless of what's going on in the market or the economy, right? We're still going to keep buying our medicine, buying toothpaste, buying staple items. So I think we'll start to see some of those defensive plays in the markets creep up.
All right, Scott Gamm, thank you so much for your insight.